Good morning, everyone. Welcome to today's webinar introducing our fix and flip financing program. Now, as the webinar goes on, if you have any questions, please go ahead and use the little questions function and we will answer them for you. With that, I would like to introduce today's speakers. That is Stuart Marvin and Andre Plamadela. Sorry, Andre, if I ruined your name.
It did not.
Stu, why don't you introduce yourself?
Yes, this is Stu Marvin. I'm one of the two co-founders of LendSure's Mortgage Corporation, which is a successor company to a predecessor company, but this company started in April of 2015. So we're 6.5 years into this company.
Okay, Andre?
Yes, my name is Andre. I joined LendSure recently in June 2000 this year, and I'll be helping LendSure with a fix and flip program.
Awesome. With that, take it away, Stu.
Yes, thank you, Rose. Welcome, everyone. Really, the purpose of today's meeting is to overview our fix and flip program, which we recently launched and are beginning to have success with it. I think it's going to be another product that you'll want to have in your product lineup for your brokers. But we're going to start with a little bit about LendSure, or then our fix and flip program, other opportunities that can be provided by LendSure, why partner with LendSure, and then we'll go to questions and answers.
Okay.
All right, Rose. A little bit about LendSure. As I mentioned, we started in 2015. We're headquartered in San Diego, although we have large offices now in Georgia, Atlanta, Georgia, in Rhode Island, just opened up Salt Lake City. We are securitizing many of our non-QM production since 2017 through a strategic alliance with Ellington. It's a financial REIT, publicly traded. We have a highly experienced management team, much of which has been together for 20 plus years, and we're lending in 44 states, and we're continuing to grow. What we do, we really focus on non-QM. We don't focus on Fannie, Freddie, Ginnie Mae, FHA. So we're a non-QM lender. We focus on bank statement, asset depletion, DSCR, investment property cash flows. We seek credit-worthy borrowers that have the inability to obtain financing for one reason or another through a bank. It may be income qualification, maybe a bank statement qualifier, maybe debt to income, a variety of things. Average FICO is over 700 on our portfolio, which we've originated over $2 billion now. Average LTV is just under 70. And we do loans such as ITINs and foreign national. So it's a non-QM product menu. And again, we don't do the governmental programs. We entered the fix and flip market just recently with Andre, and we'll spend more time specifically on fix and flip because it was such a hot market. Prior to founding LendSure, Joe Leiden, my partner, myself, we actually ran an investment fund that invested hundreds of millions of dollars in actually flipping loans, flipping home products. We did it predominantly in Southern California, transacted over a period from 2008 to 2015 over 500 different properties. They were purchased from courthouse, realtors, auction.com, and had an entire team of project managers, construction crews, general contractors, and we did that business for 7 years. So we're very familiar with the business. Now, when we started LendSure, we did not provide financing for fix and flip to begin with. We started in the non-QM space, and was introduced to Andre about 9 months ago, a year ago, and he had enormous experience in this, and we thought it would be a good way to begin the fix and flip program, which, as I said, we launched a couple months ago. This is a little bit about the gross profits per sale of fix and flips since 2020. When I was doing fix and flips, we really started in 2008 and ran it through 2015. The hottest market seems to be at the time Pennsylvania, where with an average fix and flip return on investment is 92.6%. So the market has been very strong in fix and flip volume and fix and flip financing, and it's a product line we thought would be beneficial for us to get into. So I mentioned the fix and flip program. I also mentioned LendSure as a non-QM lender. But to give you a highlight of some of the things we do other than fix and flip products is as I mentioned, we do 4 national loans, cash out loans up to $1 million. We'll do non-warrantable condos. We'll also do condotels. Many lenders will not do condotels. We'll do condotels. We do 2 to 4 properties. We just put into our programs just starting November, a 5 to 8 unit property product, second homes, bank statements, construction, bridge, asset depletion. We'll do interest only on our super prime. We'll do lease options and land contracts, and we do 1031 exchanges, which is a very unique niche. And we actually will do now reverse 1031 exchanges. So a very broad product menu of non-QM loans. Fix and flip was just going to add to that. So if you are not a broker with us now, some of the reasons why brokers do partner with us is common sense, flexible underwriting and human decisions. We're not a robotic automated decisioning process. Over 1/3 of the loans we originate do have an exception to our guidelines that's documented with a compensating factor. So it's a very user-friendly human thought process, judgment, decisions. We have experienced AEs. We will qualify your borrowers up front. We'll do bank statement spreads and get a DTI in a submission process. You don't have to wait till the end of the underwriting process to understand what a bank statement income DTI calculation would be. And we encourage a lot of communication between our brokers and our pre-qual underwriters. We actually have underwriters in the initial submission process, which is deemed to be very beneficial when understanding how to structure a loan, the pricing, and the communications that can go back to the borrower.
With that, go ahead.
Yeah.
I'm sorry. No, I'm sorry.
I was going to turn it over to Andre at this point, so.
Go.
Hello, everyone, and thank you, Steve, for the introduction. About LendSure's fix and flip program. If someone is not familiar with what a fix and flip product is basically somebody buys the property in maybe a distressed condition, maybe below market value, that requires some additional renovations. So they buy the property, they invest a little bit or more than a little bit into the rehab, and they put the property back on the market and sell for profit, pay off LendSure loan, and go back into the same transaction. So we welcome any level of experience. We of course prefer to work with seasoned real estate investors, but we also happy to work with someone who's just entering the fix and flip market. We will guide any client through the process and explain how it works if there are any questions. As soon as we receive the lead, we return the term sheet within hours or up to 48 hours. That's our goal, to return the term sheet within a short period of time. And as Stu mentioned, we still apply the same common sense underwriting that other LendSure products offer. Rose? We work with credit scores as low as 660. Our interest rates start as low as 699. This product specifically targets non-owner occupied, single family, multifamily, and sometimes mixed use properties. We offer up to 85% of the purchase cost. We offer up to 100% of the construction cost. and the total loan amount up to 70% of the after repair value and up to 85% of the total cost. The program is 12 months loan term with interest-only monthly payments. The loan process is much simpler than traditional mortgage process. We start with the application. It's a simplified, it's a much shorter version of the ERLA. It's available on LendSure's website. The application is asking for some information on the borrower. Typically, it's the estimated FICO score, the prior flipping experience, whether they have any recent bankruptcy, foreclosure, judgments. And then it's asking for the transaction details, such as the property address, the purchase price, the construction cost, the estimated after repair value. Based on that information, we are able to determine what rates, what terms we can offer to the client, and based on that initial information, we prepare the term sheet. At that point, we're not running the credit. We're not applying for a loan does not impact the credit score. Nothing starts until client is happy with the terms and the term sheet is signed. Once the term sheet is signed, we transition into the underwriting. Only at that moment we run the credit, we order appraisal, we order construction inspection, and slowly moving towards the, or trying to move fast towards the clear to close and funding. And that's what the application looks today. Not sure if it's clearly visible, but we have 3 sections. The first section is the personal details. As I mentioned, it's just some basic information on the borrower, the estimated credit score, the number of flips in the past, the bankruptcy, felony conviction, if any, judgments, etc. Then the broker details. That section helps us actually to tie internally to the application from the broker to account executive. And then the transaction details, where we just asking for the property address and the purchase price, construction cost, if there's any change in the square footage, etc., and the exit strategy.
And this can be found on the LendSure website, just so everyone knows.
And I am getting a couple of questions whether the people are going to be getting a copy of this presentation. Of course, there are URLs here that they want to take a look at. And yes, look for an email from me in about an hour after the presentation ends, and that will have a copy of the slide deck.
As I mentioned, once we have a signed term sheet back from the broker client, then we commence underwriting. We run the credit, we run the background. If there are no surprises there, if the information in the initial application is confirmed, then we move to ordering appraisal and move to ordering construction inspection, and we also sending a list of required documents to complete the underwriting process. Next slide. So the typical documentation that we ask in the underwriting is client's driver license, client's social security card, 2 months of bank statements, property insurance, the title insurance, the purchase contract, the scope of work. We prefer to lend to an LLC just because it provides an extra layer of protection, not just to the lender, but also to the borrower. And on the LLC side, we're asking for the certificate of formation, EIN number, operating agreement, certificate of good standing, and the resolution to borrow. Next slide, please. So once we complete the underwriting and we fund at closing, we will advance funds towards the purchase of the property, and the construction loan will be sitting with us as a holdback and pending client submission for the draw request. Our construction loan is disbursed in stages based on the draw requests from client, and it's typically disbursed as a percentage of the cost, and that percentage equals the same percentage as the loan to cost ratio on the construction component. So for example, if client's construction cost is 100,000 and we agreed to lend 80,000 towards that construction, then it's the 80% loan to cost on the construction component. So if client submits the draw request for 10,000, then the expected reimbursement is about 80% of that 10,000 or 8,000. The draw requests typically require the title rundown, the invoices from the paid invoices to contractor, the contractor lien waiver, and the construction inspection, the progress inspection.
Okay. And with that, please go ahead and use the little questions function to submit your questions. Andre, I've got a couple of different people asking for like examples of loans that we've closed so that they can kind of get an idea. I've got a couple of people asking.
Yes. Last week, I believe, correct me if I'm wrong, Stu, but last week we closed a loan with at 75% of loan to cost. So the purchase price was $351,000. The renovation budget was $50,000, and the client's expected ARV was $440,000. So we offered a 75% of the total loan to cost at 7.99% interest rate with 1% origination, 1 point to lender. So the reason why we went a little bit conservative on this specific transaction, the client did not have experience, and we compensated that with a more conservative loan to cost and a point added.
Yeah, and we're looking at one right now that the client has a lot of experience, and it's looking at an 85% LTV and no point charge. So a lot of that is going to be depictive of the project, the ARV, the appraisal, and the experience of the investor.
Okay. And then
sorry to interrupt your host. And we received this application, I believe, on October 6th, and we closed the loan on November 5th. So from receiving the lead to actually signing the documents, it was exactly a month, but of the actual underwriting, it was about a little more than 2 weeks.
Okay. And is this available in all states?
Yeah, this is Stu. As you saw from the slide deck, we're licensed in 44 states. This product is available in those states and is also available in some states we're not licensed because it's an investor product. So I would say substantially all states we'd be able to do this product. There may be 1 or 2 states that require specific licensing, and if that we happen to come across that, we'd notify you as soon as we saw the app and did the research. But substantially all states that this product would be available in, just like our 9QM product.
Okay. Do I have to be approved with LendSure to do fix and flip loans?
Yeah, there's a broker approval process. I'm not sure if those on the call are approved brokers with us, and and learning a little bit about fix and flip, or there are brokers that would like to be approved, but the broker approval process is pretty straightforward. It's through a Comergence. We have well over 1,000 brokers signed up now through our Comergence portal. And yes, we'd like to have you as an approved broker for this product also.
Can client borrow purchase-only funds?
No, the fix and flip works specifically for the acquisition and construction.
Okay. And
now, Rose, I'll just add to that. That's typically the way it works, although depending on what the clients are looking for. I personally, and I do them on occasion, I'll do purchase-only funds for fix and flips, but if you're not going to go out to the property site after the purchase, and you're never going to see the renovations, you're never going to have a chance to inspect it, you're never going to have a chance to see the quality of it, and track the project, that adds an incremental risk to the lender. And so we might consider a purchase only, but it wouldn't be at the 85% LTV. It would be at a lower LTV because we would have no knowledge of the activity of that property for the 3 or 6 months of the construction, which adds risk.
okay, the same person has a follow-up question. So they can't borrow for purchase and reno out of pocket?
Well, I just answered that question.
Oh,
Is
sorry.
that's not our typical program. It's not a typical program for most people lending on fix and flips because they want to stay associated with the property as progress is made. But we would consider that when we consider it, we knowing we're not going to be at the property doing inspections, you do that with an LTV or a little more collateral on the purchase.
Okay. We have a question about our bank statement programs. What percentage of the gross deposits are used with the bank statement loan to determine their qualifying income?
Yeah, with bank statement loans, we can use all the deposits if all the deposits are used for the business. On occasion, we review the bank statements. If the bank statements show there was a sale of a property unrelated to the business and it comes through and it's, let's say this business had typically $100,000 every month, but we see one month that has 250,000. If 150,000 was from the sale of a one-time property not related to the business, we would exclude that. But assuming all the deposits are valid business deposits, we consider all those. Now, I think the next question is, well, what expense factor are we using for the deposits? And what we do is we don't have a standard expense factor. We actually do a self-employment questionnaire, again, understanding the business, and our seasoned underwriter assign an expense factor to the business. So if you're a real estate broker working out of your house, the expense factor could be very low. If you're a restaurant owner, the expense factors tend to be higher.
Okay. With new investors, what about a cert of good standing?
Yeah, the certificate of good standing is something related to the underwriting LLC. If it's an existing LLC, then we just checking that it's in the good standing with the state. And it's typically every state has provides a certificate that can usually be ordered online.
Okay. Does LendSure monitor the project directly or via an outside source?
So the construction progress is monitored through draw inspections. As client submits a draw, we send inspector to verify that certain items were indeed completed. Because if client submitting the draw request for 10,000 and it shows the cost for rough electric and rough plumbing, the inspector visiting the property can verify and take the pictures of that and send us the report.
Okay. Where can I get the application/purchase sheet?
It's available online under our non-QM specialty loan programs. There's a drop down and there's a link to fix and flip with 2 buttons, one related to the purchase and one related to the refinance.
So lendsure.com, and then you navigate through to specialty products.
Um, how does that affect the timelines for when you request a draw and the inspection is complete?
Typically, from start to finish, it takes about a week to process the draw request. At the time we receive the draw request, and as soon as we receive the draw request, we reach out to inspector. Then inspector reaches out to client, and then they both communicate a timing that works for both of them. And it can be, if inspector is available, it can be done in a matter of days. And if we receive all the information supporting the draw request, such as the title rundown and the paid invoices and a lien waiver, but typically, historically, it's about a week.
Okay. What is the percentage of funds for closing and money for showing, for purchase price, construction, and overall?
Yes. So it really depends on the structure of the each individual transaction. If we go up to, let's say, 85% of the purchase price and up to 85% of the construction cost, then at closing, obviously, client will need to bring 15% towards the difference of the purchase price and the loan amount, plus the closing costs, which um, partially related to LendSure process, such as the underwriting fee, um, and um, and some costs that unrelated to LendSure, such as the title cost, the client's attorney cost, and etc. In terms, so client doesn't need to bring funds to closing for the construction component, but when we review the bank statements, we want to make sure that client has sufficient funds to carry the transaction for 3-4 months after the closing, because the construction works on a reimbursement basis. Client first needs to spend money, and then and then client gets reimbursed by LendSure. So in our underwriting, when we're reviewing the bank statements, we want to make sure that client has some funds available to carry the project.
But this fix and flip loan closing is no different than any other loan closing. You're going to have to bring in the funds representing, the 15% if it's an 85% LTV, and typical closing costs in any loan transaction.
All right. Well, let's see. One last question. Is this required to use a general contractor for all renovations?
Yes, I want to say that yes, on every transaction. Obviously, if it's a small rehab where it's just painting the walls, and client can show that they have experience in painting walls, then we can approve moving forward without the GC. But typically, we would like to see the estimates prepared by the licensed general contractor. And in some occasions, client will be a licensed GC, and
as Andre mentioned, that's very dependent on the nature of the renovations. We're sending out term sheets where they're adding house and square footage in addition and getting permits, and obviously that requires a general contractor oversight. We're sending out other term sheets where it's painting and carpeting, and it's a much less extensive rehab, and the rehab is not of trades that requires a general contractor oversight. So we consider both, but typically the general contractor, by the nature of the rehabs, is the normal method.
All right. Okay, with that, that is it for questions and answers. If more questions do occur to you, please go ahead and respond to the email that that you're going to get in about an hour, which will have a copy of the slide deck and a recording of this webinar. With that, I would like to thank our presenters, and I would like to thank everyone for attending.
Thank you very much.
Thank you.